Hello, my name is Mayanka. I am account and a finance trainer from Uplatz. Today, in this class, we will discuss part 5 of computation of total income and tax payable. This is the last class of this chapter in which we will finalize the computation means the topic of computation of total income and tax which is required to be payable by the assessee on such total income. So now we will start part 5. Step number 13. Examine whether or not to exercise the option under section 115 BAC for availing concessional tax liability. We will examine whether or not to exercise the option under section 115 BAC means whether we can examine we can exercise the option of section 115 BAC about which is related to the concessional rate of tax, concessional rate of income tax. Normally, as per the provision of the Income Tax Act, there are the tax which is required to be paid by the assessee means in the case of individual, the tax rate will be 0 to up to 5 lakh up to 2,50,000 nil, 2,50,000 more than 2,50,000 to 5 lakh 10%, sorry 5%, more than 5 lakh to 10 lakh 20%, and more than 10 lakh that it is rate 10%, 30% is the rate of tax. But now there is another option, concessional tax rate. Concessional tax rate under section 115 BJC. BAC, according to which the assessee is required to make the payment or the tax will be calculated at the concessional rate. Just like up to 2,50,000, the tax rate will be 0. More than 2,50,000 to 5 lakh 5%. More than 5 lakh to 7 lakh 50,000 10%. 7 lakh more than 7 lakh 50,000 to 10 lakh 15%. More than 10 lakh to 12 lakh 50,000 20%, and more than 2 lakh 50,000 to 15 lakh 25%, and more than 15 lakh to more than 15 lakh, the tax rate will be 30%. The tax rate will be 30%. So for the purpose of this, we will discuss option to pay income tax at the concessional rate. Means when there is any assessee who adopt the concessional rate, then there are some deductions or some exemptions are not available. Means as per the section 115 BAC, if there is an individual and the HUF who wants to make the payment of tax on his total income as per or according to the or at the these special rate, then the following rate will be applicable, and there are certain conditions. Means such a rate is applicable but subject to certain conditions. First, we will discuss rate. What will be the rate of income tax? What will be the rate of concessional income tax? Up to 2,50,000 means if the assessee whose total income is up to 2,50,000, up to 2,50,000, then the tax rate will be 0. Means the assessee is not required to make the payment of tax. The assessee whose income is more than 2,50,000 but up to 5 lakh, more than 2,50,000 but up to 5 lakh rupees, then the rate of tax will be 5%. Then the rate of tax will be 5%. The assessee whose total income is more than 5 lakh but up to 7.5 lakh, more than 5 lakh but up to 7.5 lakh, then the tax rate will be 10%. The assessee whose total income is more than 7.5 lakh but up to 10 lakh, then the tax rate will be 15%. If the assessee whose total income is more than 10 lakh but up to 12.5 lakh, then the tax rate will be 20%. And the assessee whose net income, whose total income is more than 12.5 lakh but up to 50 lakh, then the tax rate will be 25%. And in the case when the total income of the assessee is more than 15 lakh, then the tax rate will be 30%. So these are the concessional rates. These are the concessional rate of income tax. Now we will discuss conditions. Now if there is any assessee he wants to avail or wants to calculate the amount of tax as per these concessional rate, then what are the conditions which are required to be satisfied? Means now we will discuss the conditions which are required to be fulfilled, which are required to be fulfilled for availing the concessional rate of tax. Means if there is any assessee wants to avail the concessional rate of tax, so what are the conditions which are required to be complied or which is required to be fulfilled by the assessee? So there are some following conditions which are required to be fulfilled so that the assessee can apply the concessional rate of income tax. Number one, certain deduction and exemptions are not available. Certain exemption and deductions are not available when the assessee wants to avail concessional rate of tax. Means section 115 BAC subsection 2 provide that while computing the total income of the assessee, the following deduction, the following exemption shall not be available. If the HUF and the individual wants to adopt the provision of section 115 BAC. If he wants to avail the provision of section 115 BAC. So the deductions are, exemptions are which are not available. Number one, section 10 subsection 5, leave travel concession. Leave travel concession is not available. If the assessee wants to avail or wants to apply the concessional rate of income tax, leave travel concession is not available. Section 10 subsection 13a. Section 10 subsection 13a, house rent allowance. The reduction of house rent allowance is not available. Section 10 subsection 14a, exemption in the respect of special allowances. Exemption in the respect of special allowances or benefit to meet the expenses. Benefit to meet the expenses which are relating to the duty or personal expenses. Means the deduction in the respect of special allowance or the benefits are not available when the assessee wants to apply the concessional rate of income tax. Concessional rate of income tax. Section 10 subsection 70, daily allowance or contingency allowance to MLA MP. Means in the case of MLA MP there are some allowances. If they are using the concessional rate of tax, then these daily allowances are not available to these MLA MP. Exemption under section 32. Exemption under section 32, 1032. Exemption in the respect of income of minor child included in the income of parents. So the exemption is 1,500 rupees per minor child. It will not be available. If the assessee follow the concessional rate of tax. Section 10AA. Tax holidays for unit established in SEZ. Tax holidays for the unit which is established in SEZ means if there is any establishment which is situated in SEZ. Then for the purpose of development of SEZ, the government provide a tax holiday. If the assessee wants to adopt the concessional rate of income tax, then such exemption will not be applicable. Section 16, standard deduction under the head of salary means as per the provision of Income Tax Act, as per the provision of salary head, there is the standard deduction of 50,000 rupees. If the assessee follow the concessional rate of tax, then the deduction of 50,000 will not be available. Entertainment allowance not available. Entertainment allowance will not available. Professional tax, it is not available. Section 24 subsection B, interest on loan in the respect of self-occupied property. As per the provision of house property, the assessee will be eligible to take the deduction in the respect of interest on borrowed capital. In the case of self-occupied property, it will be maximum 2 lakh rupees. But if the assessee follow the concessional rate of income tax, then such deduction will not be available. Then the deduction under section 24 subsection B will not be available. Section 32 subsection 1 clause 2nd A. Additional depreciation, it is the deduction in the respect of additional depreciation will not be available. Section 35 subsection 1 clause 2nd A, 3rd or section 35 A, subsection 2AA, subsection 2AA means the deduction. The following deductions are not available. The following deductions are not available to the assessee if the assessee follow the or adopt the or want to make the payment of tax at the concessional rate of tax. Number one, notified approved research association, university, college, other institution for scientific research. Means the notified means if there is any assessee, he contribute any amount to the notified approved research association or to any university, to any other institute for the scientific research. For the scientific research means if there is any assessee, he has make the payment to any notified approved research association, to any university, to any Indian company, or to any research association, to any institution or national laboratory, university, IIT, then such amount will be exempted under section 35. Then such amount will be exempted under section 35. But when the assessee meet the payment of tax at the concessional rate of income tax, then these deductions are not available. Means the contribution which is made by the assessee to the notified approved research association, university, college, other institution for the scientific research, or any contribution which is made by the assessee to the approved Indian company for the scientific research, to the approved Indian company for the scientific research, or there is any contribution which is made by the assessee to the notified approved research association, to the notified approved research association, university, college, other institution for research in social science or scientific research. When there is any contribution which is made by the assessee to an approved national laboratory, to any university, to IIT, contribution to any specific person for the purpose of scientific research, then these contributions will not be eligible for deduction. Then these contributions will not be eligible. These contributions will not be eligible for deduction if the assessee make the payment of tax or want to make the payment of tax at the concessional rate of income tax, deduction under section 35 AD, investment linked deduction. Linked deduction for the specific business. It will not be available. If the assessee calculate the amount of income tax on his income at the concessional rate of tax. Section 35 triple C. Section 35 triple C of the Income Tax Act means the assessee who wants to apply the section 115 BAC, then the provision means the deduction which is available under section 35 triple C will not be available. Means the deduction in the respect of expenditure which is incurred by the assessee on the notified agriculture product will not be available. Section 57 subsection second A, deduction in the respect of family pension, it is not available. Deduction under section 80C to 80U. If there is any assessee who wants to apply the provision of section 115 BAC means concessional rate of tax, then he will not be eligible. He will not be eligible to take the deduction under chapter 6A. Under chapter 6A means the deduction of 80CU to 80U will not be available to such assessee. Means the deduction under chapter 6A other than employer contribution toward the national pension scheme under section 80CCD and deduction in the respect of employment of new employee under section 80JJAA is available. All other deductions are not available. So if there is any assessee So, if there is any assessee who wants to apply the provision of section 115 BAC, means if he want to calculate the amount of income tax at the concessional rate of income tax, then these deductions are not available, these exemptions are not available to the assessee. Certain losses may not be allowed, means certain losses cannot be set up by the assessee. Set up by the assessee. While we will compute, normally when we compute the total taxable income of the assessee, then if there is any loss from the previous year, then we can set off it. We can set off it. Or if it is not properly adjusted or properly set up, then we can carry forward it. But when there is any assessee, if he wants to calculate the amount of taxable income as per section 115 BAC, then certain losses, means the carry forward of certain losses is not applicable. Is not applicable. While computing the total income of the assessee, set off of any losses, carry forward of losses, depreciation, carry forward of depreciation from any earlier assessment year. If a loss or depreciation is attributable to any deduction which is referred to in A above, or loss under the head of house property with any other head of income will not be allowed. Means the set off of the loss and the carry forward of the loss is not allowed. Is not allowed. Deduction or the additional deduction. The deduction under section 32 of the Income Tax Act. The deduction of depreciation under section 32A in is to be determined the prescribed manner, means that deduction in the respect of depreciation. Deduction in the respect of depreciation means depreciation in the respect of any block of assets. The deduction in the respect of any block of assets entitled to be more than 40%, and it would be restricted to 40% of written down value of the block of assets. Additional deduction will not be available, means the provision of additional deduction will not be available. Means if there is any assessee who wants to calculate the income which will be taxable under the Income Tax Act, and he is calculate or the assessee calculate the amount of tax as per the concessional rate of tax, then the additional deduction is not available to such assessee. And in the case of depreciation, it will be restricted to 40% of WTP. It will be restricted to maximum 40% of WTP. Additional point, in the case of any individual or in the case of any HUF who obtains section 115 BAC, total income should be computed without set off of any losses. Without set off any loss brought forward or depreciation any earlier assessment. Means when we will calculate the income or when we will calculate the tax of such income, and when we apply section 115 BAC, means the concessional rate of income tax, then the income will be computed. The income will be computed without set off any losses. Means we will not provide the set off of any loss, any brought forward loss, any depreciation from any earlier year, where such loss or depreciation is relating to any of the deduction which is listed in point above. Means such loss or depreciation would be deemed to be, it will be considered that it is already being given. Means the deduction in the respect of such a depreciation, such a deduction is already given. Where there is a depreciation allowed in the respect of block of assets from an earlier year, which is related to the additional depreciation, then the additional depreciation will not be available. Additional depreciation will not be available. Means the provision of additional depreciation will not be available when the assessee make the payment of tax or calculate the amount of tax at the concessional rate of income. So for the purpose of this, we will discuss a example, and on the basis of such example, we will understand. Let us consider the case of Mr. X, who carry the business of steel, who carry the business of manufacturing of steel. He has unobserved depreciation as on 1st of 4, 2020. The amount of unabsorbed depreciation as on 1st 4 2020, which include amount which is attributable to additional depreciation. Means there is the amount unabsorbed amount of depreciation, and such unabsorbed amount of depreciation is also contain the additional amount of depreciation. Additional amount of depreciation. Section 32 subsection 1 clause second A of the previous year 2019-20 or any earlier previous year in the respect of block of plant and machinery. Means such a depreciation is additional depreciation is related to the plant and machinery. If he exercise the option of section 115 BAC, means if he wants to calculate the amount of tax at the concessional rate of income tax, then the amount of this additional depreciation will not be eligible for him. Means the amount so attributable to additional depreciation of the earlier year and the remaining unabsorbed as on 1st 4 2020 would not be available. It would not be available, or it cannot be set up by such assessee from the current year profit. Means from the current year profit he cannot set up such amount. Accordingly, the WDB of the block as on 1st 4 2020 has to be increased by such amount. Means when the deduction is not available in the respect of the additional depreciation, then the WDB of the block will be automatically increased. It will be automatically increased. So, if there is any assessee who apply the concessional rate of income tax, then the provision means the additional depreciation to such assessee will not be available. It will not be available. So these are the conditions and these are the those deductions or the exemption which are not available if the assessee follow the concessional rate of income tax. Time limit for exercise of option. What is the time limit for exercise the such option to exercise the such option? So the concessional rate would be applicable only if the option is exercised in the prescribed manner. Means if the option is exercised in the prescribed manner, then the provision of concessional rate of income tax will be available, will be applicable. Number one, in the case of individual and HUF having no income from business and profession, if there is any assessee, there is any individual or the HUF, such assessee does not have income which will be taxable under the head of PGBP. Means in the case of individual and the HUF having no income from business and profession. So when there is any assessee, means individual and HUF who does not have the income which will be taxable under the head of PGBP, then he has an option to excise his return of income, and which is to be furnished under section 139 for the previous year relevant to the assessment year. So in effect, such individual or such HUF, he can make the payment of tax. He can make the payment of tax at concession rate of income tax, and he may excise the option in 1 year and not to excise the option in another year. Means when there is any assessee and the assessee is individual or HUF and he has no business income, means there is no business income, then the assessee has to excise along with the return of income to be furnished under section 139 subsection 1 for the previous year which is relevant to the assessment year. For the previous year which is relevant to the assessment year means just like 18-19 and the assessment year 19-20. So it is available for the previous year 18-19 to the assessment year. To effect such a individual and HUF, he can choose or it can choose whether or not to exercise the option in each previous year or not. Means the individual and the HUF can choose whether or not exercise the option in that previous year. He may choose to exercise the option in 1 year and not to exercise the option in another year. Means he may choose that either to exercise such option in that year or not. Means it is not mandatory you will follow it continuously. If you want to, you can choose it. Otherwise, you can use or you can choose the normal provision, normal tax. In the case of individual and HUF having income from business or profession, if there is an assessee, he has business income. If there is an individual or the HUF has the business income, then sorry. So if there is an assessee, he has the business income or it has the business income, then such option has to be excised on or before the due date, which is specified under section 139 subsection 1 for the furnishing of income tax return in the previous year. Means such option is required to be excised by the assessee. Such option is required to be excised by the assessee on or before the due date of filing of income tax return. Means such option is excised, is required to be, such option is required to be excised by the assessee before, on or before the due date of filing of income tax return, which is specified under section 139 subsection 1, which is specified under section 139 subsection 1, or any later, means he will, which is specified under section 139 subsection 1 for the any previous year, for the any previous year which is relevant to the assessment year 21 and 22 or any later assessment year. Once he excised such option, once he has excised the option to make the payment of tax at the concessional rate of income tax, then he will follow it subsequent assessment year. Means if the assessee who has the business income and he apply the concessional rate of income tax, then he will continuously follow it. He will continuously follow it. Such option can be withdrawn only once where he excised, where it was excised by the individual NHF having business income for the previous year other than the year in which he has excised. Means the option can be withdrawn only once where it was excised by the individual or the HUF which is having the business income in the previous year other than the year in which he was excised. So the individual or the HUF shall never be eligible to exercise the option under this section except where such individual or HUF cease to have any business income, in which case option 1 above shall be available. Means the assessee who has the business income or who has adopt or apply the provision of section 115 BAC, then he will follow it continuously. He will follow it continuously. He will lapse it or he will withdraw it only when he does not have business income. When he does not have business income. Consequences for the failure to satisfy the condition which is mentioned under section 115 BAC subsection 2. Means what will be the consequences if the assessee fails to satisfy the condition which are specified under section 115 BAC subsection 2 to apply the concessional rate of income tax. So what will be the consequences? So the following are the consequences for the failure to satisfy the condition mentioned above. Means if there is any assessee, if he fails to satisfy the condition which are specified above, then these are the consequences. Number 1, in the case of individual and HUF having no business income and no profession income, means in the case when there is an individual or HUF and such assessee does not have business income, or such a assessee fails to satisfy any of the conditions which are specified in point 1, 2 and point 3. Means if the condition which are specified in point 2, point 3, 1, 2 and 3 in any of the previous year, then the option which is exercised by such individual by such HUF will be considered as invalid. Means it will be considered invalid for the relevant previous year. It will be considered as invalid. Means the assessee will not be eligible to adopt the concessional rate of income tax for the relevant assessment year. Consequently, the other provision of the income tax 1961 would apply as if the option has not been excised for the assessment year which is relevant for the previous year. Means the options other option of the Income Tax Act 1961 would apply as if such option has not been exercised by the assessee in the relevant previous year. Means other provision will be applicable just like that. He has not adopt the provision of section 115 BB, BC, BAC. So means he has not adopt the concession rate of income tax. So if he will not adopt, then all the provision of income tax will be applicable at normally. So it will be applicable. In the case of individual and HUF, who have business income, or the profession income. So in the case if individual or the HUF, individual and the HUF fail to satisfy any of the condition which is mentioned in point 1, 2, and 3 in above in any of the previous year, then the option which is exercised by such assessee will be considered as invalid. It will be considered as invalid, and then all the provision of Income Tax Act will be applicable on such person, and it will be considered means such provision will be applicable as that the option has not been means the option under section 115 BAC is not applied by the assessee in such a previous year, in such relevant previous year or and subsequent previous year. Means it will be considered that, or it will be thinking that no provision is applied by him or by the assessee, by the individual or HUF in this year. The option of section 115 BAC means concession rate of income tax, and if the assessee does not follow or does not adopt the concession rate of income tax, then all the provision of Income Tax Act will be applicable normally, just like deductions, exemptions will be available normally. AMT liability not attracted means if there is an individual or HUF who is paying the tax at the concessional rate of income tax, then the provision of AMT will not be applicable. The provision of alternative minimum tax will not be applicable. Note, it may be noted that in the case of individual or HUF who does not have business income, who does not have professional income, the total income and the tax liability may be computed every year, both in the accordance with normal provision and in the accordance with the provision of Income Tax Act, and in the provision and according to the provision of section 115 BAC. Means when there is an assessee and he is an individual or HUF, and such assessee having income from business, such assessee having the income from the business and profession, then the total income and the tax liability of such assessee it will be computed every year. It may be computed every year in the accordance with the provision of income tax. Normal provision of income tax means normal rate 5%, 10%, 30%, and in the accordance with the provision of section 115 BAC means concessional rate of income tax, and we will determine which is more beneficial for the assessee, which is more beneficial of the assessee, which is more beneficial the assessee will adopt. It means the assessee will make the payment of tax according to this particular section, which is more beneficial to assessee, which is more beneficial for the assessee. Because in the case when the assessee does not have business income, then he has option, then he may follow or he may adopt section 105 BAC or not. There is no any imposition that you will follow it you have subsequently means follow permanently. There is no any provision is there. You can choose whether to use or whether to adopt or not. For the purpose of tax deduction of source, for the purpose of TDS, the CBDT has by circular number C1 of 2020 dated 31st April, dated 13th April 2020 clarified that an employee having the income other than income from PGBP means business income other than profession income, and such assessee wants to calculate the amount of tax at the concessional rate of income tax, then he is required to intimate to the deductor. He is required to intimate to the deductor, be his employer, of his intention for each previous year, and upon such intimation, the deductor shall compute the amount his income. The assessee means the employer, he will compute the amount of tax on his income at the concessional rate of income tax. Means that TDS will be calculated by such employer according to section 115, means according to the provision with the provision of section 115 BAC means if there is any assessee, for the example, Mr. Ram. For the example, Mr. Ram wants to follow the provision of section 115 BAC, then he will intimate to his employer about such provision. Means I am using, or I will adopt provision of section 115 BAC. Then the employer will calculate the amount of TDS accordingly. If such intimation is not made by the employee, then the employer will deduct the amount of TDS at the normal rate, at the normal provision of income tax, not as per the provision of section 115 BAC, normal provision. It is also clarified that the intimation so made to the deductor shall be only for the purpose of TDS. Means the intimation which is given by the assessee to the employer is only for the purpose of TDS during the previous year, and it cannot be modified by the assessee during the year. It cannot be modified by the assessee during the year. However, the intimation would not amount of excise option under section 115 BAC, and the person shall be required to do along with the return of income which is furnished by him under section 139 subsection 1 in the previous year. So the option at the time of filing of income tax return under section 139 subsection 1 could be different from the intimation which is made by the assessee to the employer, so that he will compute the amount of tax accordingly. And if there is any person who has the income which will be taxable under the head of TGBP, then and such assessee wants to calculate the amount of income tax as per the section 115 BAC, means at the concessional rate of income tax, then when he will excise or once excise for the previous year at the time of filing of his return of income, then he will follow such provision in the subsequent year. For the subsequent year means if such option is adopted by the assessee in the any previous year, then he will follow it subsequently. Accordingly, the person who having the income under the head of TGBP, he will also intimate to the employer about such adoption, so that the employer will calculate the amount of income, also the amount of TDS accordingly. TDS will be calculated by the employer. If the employer does not intimate to the employer about such, then the employer will deduct the amount of TDS at the normal rate of tax, at the normal rate of income tax. Step number 14. Credited for advance tax, TDS and TCS, means if there is any advance tax is already paid by the assessee, or there is any TDS or there is any TCS which is already deposited to the government, then the assessee will take the credit of these amount when he will make the payment of tax. Means the payment of tax will be reduced by advance tax, TDS or TCS. So the TDS, the tax deduct at source at the time of payment of salary, rent, means the TDS is deducted by the person at the time of payment of salary, payment of rent, interest, fees for technical services, fees for professional services, etc. The payer has to deduct the amount of TDS at the specific rate, in the specific section, and make the payment of such TDS to the government. Such a tax, such a TDS has to be reduced by the payer to determine his net tax liability. Means the amount of TDS is required to be reduced from the total tax liability from the assessee, so that we can calculate the net amount of tax liability. It is a collective. It is a collective by the seller in the case of sale of goods. And it will be collected at the specific rate of such particular section. Credit of such tax collection means the credit of such TDS or TCS is available when we will determine the income tax liability of the assessee. Means If there is any TDS which is deducted, then such amount of TDS will be reduced from the tax liability of the assessee. It will be reduced from the tax liability of the assessee. The Income Tax Act 1961 also require the payment of advance tax. Means if there is any assessee whose amount of tax payable, means estimated amount of tax payable is 10,000 rupees or more than 10,000 rupees, then such assessee is required to make the payment of tax, make the payment of advance tax in the 4 installment: 15%, 45%, 75%, and 100%. And it will be required to be paid 15th July, first installment 15th July, 15th July. First installment is required to be paid by, means the first installment for April, May, June, 15 July, July, August, September, October, 15th October, and for the October, November, December, sorry, for the first installment is required to be paid in 15th July, means for the month of April, May, and June. For the next installment for the July, August, September, it is required to be paid in October, 15th October. And third October, November, December, it is 15th January. And the last is 15th March. Means the first installment is required to be paid 15th July and 15th October, 15th December, and 15th March. 15th June, 15th September, 15th December, and 15th March. So both corporate and the non-corporate, they are required to make the payment of tax into the 4 installment, and they will require to make the payment of tax on or before 15th June, 15th September, 15th December, and 15th March of the financial year. If the assessee has presumptive provision under section 44 AD or 44 ADA, then the payment of advance tax will be made on or before 15th March of the financial year. Means the advance tax will be paid in total on or before 15th March. From the total tax due, deduct the amount of TDS and TCS and advance tax, and after that we will calculate the net amount of tax which is required to be payable by the assessee. Means the net tax liability of the assessee will be total tax liability less TDS, TCS, and advance tax which is paid by the assessee. So the net tax liability will be arise. Tax payable and tax refund. Tax payable and the tax refund means after calculating or after adjusting the TDS, TCS, and the advance tax, we will calculate the amount which will be required to be payable or which is refundable. Which is payable or refundable means after adjusting the advance tax, after adjusting the TDS, after adjusting the TCS, the assessee will calculate the amount which is required to be payable or which is refundable. Such amount should be in the round off of nearest multiply of 10. Means it should be multiply 10. The assessee has to pay the tax if he is required to make the payment of tax, and such payment is required to be made by the assessee at the time of filing of his return of income. Means such payment is required to be made by the assessee at the time of filing of his return of income. If there is any refund due, then the assessee will get the amount of such a refund after the filing of his return of income. After the filing of his return of income, after some time, he will get such a refund. Or the assessee will get such a refund. So on the basis of this, we have completed the concept and the chapter of computation of total income and the tax payable. On the basis of such a discussion, we have understand what are the steps which are taken by the assessee to calculate the amount of taxable income and the tax liability, means tax liability which are required to be payable by the assessee. So on the basis of part 1 to part 5, we have completely covered the concept of total income and the tax amount which is required to be payable by the assessee. So for the purpose of full discussion of this chapter, kindly consider all the classes so that you can properly understand each and every concept. So thank you so much for watching this video. Bye-bye.